Good morning, everybody. Welcome to today's midweek update. It is Wednesday, September the 25th, and the market is moving sideways right now, but it's been in what I consider to be a quote unquote green condition. Now, what does that mean and why should you care? So, a green condition means that the market is basically giving me the green light to step on the gas and uh, put more money to work. And the reason why it's doing that is because you put on trades, trades work, and you have more capital to play with. And that's basically how it goes. But it's a little bit more than that. And I'd like to share with you this process. So if you're new, if you're hearing this for the first time, go ahead, type into the chat. Let me know if you've seen at least a couple of these. Let me know that too. And I want to say welcome to everybody that's hopping on. We've got a bunch of people hopping on over at X. So let's take a look at the charts and see what is up. All right, so here we go. We have a bunch of indexes up here, and I'm going to turn off the annotation so that way it doesn't look way too overwhelming. So what we have here is the major indexes. We have the S&P 500, we have the NASDAQ, the Russell 2000, the New York Stock Exchange, the Dow, and down here is the IBD 50, which basically tracks growth stocks. Now, the reason why I'm interested in taking a look at these and why I said earlier that the indexes are basically moving sideways is because, well, they are, right? Over the last couple of days here, they started to move sideways, just kind of moving up ever so slightly, almost like a snail's pace moving up like this. And so why does that have me excited? Well, why am I saying that, oh, this is a green condition? The reason why isn't just the indexes, right? Because the indexes are a reflection of the market as a whole. What I want to do is I want to look at how growth stocks are performing, how they're setting up, how they're breaking out, and how the stocks that I'm in are doing, because if we have a process and we're picking trades and all this, then if it's a hot market, we should be doing well, right? If we have a process and it's a hot market and we're selecting stocks, we should be making money. If we're not, then that's going to be some really good feedback that the market's giving us. So at this point, we've got an all systems go green light, and we've had that green light now for about 2 weeks almost. Going back to, well, what is that? Friday the 13th. Great day for it, right? So what happened? What happened, and also what's happening now? So we'll take a look at some of the stocks that I'm in. Let me know if you're in any of these names. Let me know if there's certain names that you'd like me to bring up. I'll put up the daily chart and I'll turn off the annotation so that way it makes it a little bit easier on the eyes. So I have a bunch of names here, right? These are all of my open trades. Some of them were started a little while ago, some of them were started a little bit more recently. I'll walk you through everything. And again, as you have questions, please go ahead, type them into the chat. We have about a half an hour together at this point, maybe about 25 minutes. So please ask questions. I want to help you. So first one up, Duolingo, right? This one was started back on the 9th of September. I had no idea that it was going to do this, but that's trading isn't about prediction. Trading is about identifying whatever it is that is going to prompt your action. For me, it's this setup that I'm seeing here, and we could talk about that. But it's making yourself available for it and then taking action when you see the setup and you verify that, you know what, this actually is a good one. So Duolingo is up How much is it up now? It's closing in on 30%. Now, my next scale out is going to be at 300 or potentially at 300. I might take it a little bit early. We'll see. But right now it's up about 30% since getting in back there. Also have Palantir. Palantir is starting to pull back. It's consolidating at this point. And when you're in trades and you see them run up and then they start to pull back, there's it there's a fine art to knowing when to give them some room and when to reel them in and say, okay, I'm going to get out of this and take my ball and go home. Part of what I like to use, and I've spoken about this tool. I put it out there. I had my friend Brandon Shapiro code it for me for free. I talk about it in the Trading Mind Wheel book. It's called the danger signals indicator. And what this does is it shows you all the things that I look for when price could start taking a dip. Now, you see this one here on Palantir, it's flashing 3 danger signals, right? It's showing that, and this is real time. So we don't know if price is going to close near the low of the day, but for right now, price is at the low of the day. It might close near the weekly low. It is Wednesday after all, and at this point, price is near the weekly low. And it's also saying that the fast stochastic is below the slow stochastic. That's one of the momentum indicators that I pay attention to see if momentum is starting to fade. And all those things are present here. But that doesn't mean that price is done, right? Well, so what I like to do is to have this whole long laundry list of danger signals. There's roughly 40 altogether, and when I start to see them stack up, then that's the weight of evidence that's going to tip us over. So it's well when I start to see 7, 8, 9 danger signals flash. The other day, well, we had, I think it was 11 danger signals in VIRT. And it's not that these things can't rebound, right? Because sometimes they can. But on this day here in VIRT, 11 danger signals flashed. And that was my sign to say, all right, I'm going to take my ball and go home. And that got me out on this day. And well, who knows? Maybe price rebounds. Maybe it sets up again. But at this point, the momentum is out, and I'm done with that swing trade. Let's see. There's a question, or is this a comment that came in from Keep It Simple? Giving that leading stock set up before the market bottoms, do you then ignore the market trend and the all clear signal from your situational awareness traffic light system? Very, very good question. So let me see how I want to answer this. So here's I'll share with you my playbook, right? And so this is this spreadsheet, and there's a lot of data in this. So don't worry about trying to figure out what everything means at this point. But there's a bunch of things that I track. And one of the things is the different signals and which way the market's moving. And to your point, keep it simple, the growth stocks and how they're performing, particularly the ones that I'm looking at. And I'm also taking a look at, well, how are the stocks that I'm in? How are those doing? So you could almost think of it as your own personal algorithm, because if you're taking a look at the market environment, and if the market environment is bouncing all around and it's kind of crazy, like it was, oh, let's say back here, right? Back in August, then that's telling us that, hey, things aren't quite right in the market. You don't have to stay out, but you should be trading cautiously, because if there's this much turbulence in one area, then the odds are not stacked in your favor at this particular moment. It doesn't say don't play, it does say be cautious. Now, if you remember Vert, right? So we'll switch back over to Vert in a second, but Vert, VIRT, was taken on this day here on August 5th, right? That's when the position was started, August 5th. So it's doing this, rounding out uh, this base. I treated this as a pullback buy, pulled back to the 21 EMA. It rebounded on that Friday. I'm buying on that Monday while the market is doing this, right? So it's not just about what the market is doing. It's a backdrop that helps me figure out how much I should risk. How large of a position should I be putting on? Right now, I've got all these trades on. The reason why I've been adding and I've been going heavier is because everything's lining up. The market is having constructive action now, right? It tightened up, it broke out, it's following through, it's relatively quietly moving higher. It's not just the Nasdaq, it's not just the S&P. All of them are basically doing this. Even the Russell, even with the Russell pulling back a little bit, it's still pulling back in a constructive way. It's pulling back towards the 5 EMA and the 10 EMA, and it looks like it's starting to get some support at it. You take those things, you overlay what the leading stocks are doing, and it's not just taking a look at, looking on X and seeing, well, what is Mark posting about today? What's Mike posting about today? Well, heck, what's Oliver Kell and Richard Moglen and Leif Serrata and Mike Webster? What Pat Walker? Well, what all these guys are doing? Well, what Dennis is posting about, right? It's not about that. It's about you running your own screens. Trust me, I'm a big fan of all the people that I just mentioned. I've interviewed most of them on my show, right? Many of them were even at the Trading Mind Wheel conference that we did a year and a half ago. It's not about me paying attention to them, right? Like I'm not they're all great people. I've learned a lot from them, but when it comes to how I'm going to look at the market, I want to look at it through what the market is speaking to me. And that's what this show is about. This is what all the stuff that I'm trying to do here is about, to teach you not to be like, well, Mike says this is good, so let's buy it. But how are you going to read the market? Here's how I go about reading the market. And I'll pull up Deep View because I've started to use Deep View the last couple of months. And it's a fantastic tool. I've replaced Market Smith or Market Surge, whatever they want to call themselves now, and I've been using Deep View. Basically the same thing, but it's like if Market Surge and Trading View had a baby, this would be it. So here's what I do. I run several different screens. I have all my weekly screens that I run here. I build a universe list. So the stocks that pass this, plus a couple of other ones that I just want to keep tabs on that don't pass anymore. Like I don't think Tesla passes the screen anymore. Google definitely doesn't pass the screen anymore. But I want to keep tabs on some of these names. So I'll build out a universe list, right? And so I'll come over and I'll take a look at my universe list. And I'll go through this one at a time. Right? Actually, what they've done here is very useful because they have the Weinstein stage analysis. Well, we don't have time to really go through all of the get into the weeds on stage analysis. But when you're in stage 2, that means the stocks are in an uptrend. We'll leave it at that. So I'll just sort by this, and then I'll take a look and see, well, how many stocks from my own universe are in stage 2. So I'll see, all right, right now there's 222, right? It's not 223, it's 222 because the first one was in stage one. Excuse me. So that's the vast majority of the list. There's 270 stocks on it. 220. Sorry, should have grabbed some water. 222 of them are in stage two. So I'll go through all of those and see which ones are setting up in one of the patterns that I trade. Then I'll take all those and I'll put them onto a watch list. And I'll call that watch list weekend setups, because that's when I found these names. And so as the week progresses, I'll go through that weekend list and I'll say, well, how's the list doing? Because that's going to show me very quickly how the market is treating the types of setups that I'm interested in that I've already screened for. Here's the list. The majority of them are doing very well. Here's a performance list, right? We'll go over to watch list and then go over to weekend setups. The vast majority are doing great, right? That's probably about 3/4 of the list. And then as the week progresses, I'll go back through the universe list. And this is a very great trick that they've added, that Deep View has added. I'll go over to my universe list, pull this up. And then I'll start sorting by this stuff here. Not that, but all this up here. So I want to see from my own universe which stocks have relative strength lines at new highs, which ones are forming 3 weeks tight, which ones have the oops reversal, which is basically when price slices down and then reverses and closes near its highs. This slingshot pattern, pocket pivots, and then volume dry ups. So I'll look and see which stocks have that, and then I'll go through each one of them and identify patterns and see what else is setting up. Fast forward to yesterday. There were a lot of stocks setting up. The most that I've seen setting up in a very long time. The most that made it to my action list in a very long time. So many where I started setting alerts on a whole bunch of stuff. And one of the things that made its way over there was NVIDIA. NVIDIA started to make the early turn. I saw this happening. I saw ARM setting up as well. Right, so let's take a quick look at ARM and AMD. And so when you see a bunch of stocks from the same industry group all setting up at the same time in a very similar way, it's often a sign that a group move is about to happen. So what I did this morning, hopped on NVIDIA, actually took a small starter in NVIDIA the other day, and then with calls, right? Because I wanted the idea with this. And now I think we're getting into the weeds a little bit. So let me know if you're following along, and I'm happy to answer additional questions on this. But for short-term cash flow, what I did with this was look at the potential breakout, see that there's a bunch of momentum coming into this name. I looked at the options market on this. You with me so far? So looking at the options market on NVIDIA, NVIDIA is a fairly liquid stock with a fairly liquid options market. So I go and I look at the 120 calls expiring in November, right? Well, why so far out? So that way there's plenty of time value in case of price breaks out and does a little dance, right? And it squats for a little bit. But because price was able to break out and go, I'm already selling some of that into strength and using that as short-term cash flow. So for those of you that are looking to trade in a way where you have some short-term cash flow, that's one idea, but it's I'll put this warning label on it. It's very advanced. If you're relatively new, you shouldn't be doing it. If you haven't mastered stocks yet, you shouldn't be doing it. Options could add a lot of fuel. Like think of it like lighter fluid, right? If you don't know what you're doing with lighter fluid and you just walk over to a barbecue and you throw it on, you're gonna burn your face off. You don't want to do that. So learn how to cook first, then you could use the more advanced stuff. All right, let's see. Um, Caleb says, I was at the tire shop and I couldn't do my due diligence, although I got an alert. I missed the trade. All right. Well, it's better to miss than to chase, right? It's better to miss than to chase. I'll leave that there. Keep it simple. How do I backtest a strategy? Now, this is a great question. How do I backtest a strategy? What platform to use? How can I know what the system does under which market conditions? Fantastic. I love this question. Keep it simple. Thank you so much for asking it. So, for a very long time, I struggled with that too, thinking that I needed some kind of special software and or pay money to somebody to see if something works. Here's the best way to backtest, right? So you're familiar with what I do. We've talked on YouTube now for a little while. So if you're trading the kind of patterns that I'm trading, or you're testing out somebody else's thing, here's what you do. Let's say that you're interested in, let's go back to VIRT because that trade's done. So you're like, wow, look at this. I want to see what would happen if I traded this. Here's what you do. You go to replay on TradingView and you paper trade it, right? So you could either, they've got something in here where you could do paper trading. I haven't used this personally, but other people have and they like it. Well, what I like to do is to just log it in a spreadsheet and then go day by day and to say, all right, how did this do? How did that do? Let's uh let's close this here. Right. And so if I was looking, how would I trade this? Be like, all right, I want to get in here, have my stop loss there, and then just advance it day by day and see what happens and see how this behaves it almost in real time, right? So you could say I'm just clicking this down here and you could see how price is evolving throughout the day. And so at one point, price looked pretty bad, right? If we go back real quick, just to start that up again. Yeah, look at this. So price started out down here. Then it starts to push up, push up. Now it triggered the entry. Then it drops a little bit. It's hanging around there. Then it follows through. And then at that point, you're saying, all right, maybe this is okay. And you keep on going with it. And then at this point, if you're testing it out, right? And this is why it's so important to test out first, rather than just tap into something because somebody says that they're doing something. At this point, let's say that you're the person that says, oh, I'm going to just follow whatever Mike does. And then this happens and you're halfway through Tuesday, you're like, oh man, that guy, Mike, that guy's such a tool. I can't believe I listened to him. It's all his fault, yada, yada. Meanwhile, you don't have no conviction in this. I'm not having any of those thoughts. The market's not having any of those thoughts. We've got to understand what we're doing and why. So replaying stocks like this is the best way to really get a feel for how the trade can develop and see it develop over time. Have your rules in place for when you're going to start to take profits, why you're going to start to take profits, how much profit you might take off and when you might sell defensively and why you might sell defensively. And that it's a laborious way, but look, it's taken me longer to talk through it, right? And then you see a day like this, right? That kind of day would scare a lot of people. Heck, that used to scare me a lot. That's one of the reasons why I came up with this whole danger signal thing and why I started to follow that because I would get shaken out on a day like that. Oh my God, look at the change in character. Price just fell. It hit this trend line, right? And it's not even a valid trend line, but I just draw it there anyway and start convincing myself of why I should exit and end up exiting prematurely. But when we have rules in place and we understand those rules and how they work and why, and we've back tested them so we have a better understanding of how they work, then we're able to have more trust in what it is that we're doing. So I hope that answers the question. All right, here's another question. But how do you also bring fundamentals into the picture while doing the back test? If I want to say, test say can slim, how do I screen for past stocks with solid earnings and sales? Now, even better question. I love where your head is at. So here's how I tackle that part. I don't have to screen for all that stuff in the past myself, and uh, the software doesn't do that, right? So deep view, you're screening for stocks that are active right now, right? So all this stuff with deep view. Oh, where did I put deep view? Hold on one second. Yeah, so all this screening that deep view is doing, it's screening everything right now, right? I'm not screening the past. Same thing with market surge. So what do? What I do is I'll go through how to make money in stocks. I'll go through Trade Like a Stock Market Wizard, right? From Mark Minerini. I'll go through Monster Stocks by John Boyk. I've got a few samples in the Trading Mind Wheel. So I'll go to books like that have already done that kind of work. So that way I know that, okay, here's some historically based stocks that have passed screens, and let's trade those. Go back in time to whatever those time periods were, and trade those. You could go back 10 years, 20 years, 30, 40 years. I think TradingView goes back a pretty long ways. Well, let's put in Apple and see how far back we could get with Apple here. Right, I'm already into the 90s with Apple. And there's been stock splits and everything, so you need to zoom in and adjust the price action on this stuff, but you'd be able to do it. It just takes a little uh, working with the data here. Now you're able to see some of the patterns, and that's how I would go about doing it. Any other questions? We are right at the half an hour mark. Yeah, so all the stocks that I screen for, I share all my screens. I share the fundamentals, everything that I'm looking at, and I put that into the research program. So you know exactly what I'm screening for and why. And so any of the stocks that show up on my lists, and well, where did the list go? Anything that's showing up on the action list, the focus list, setups, all this stuff, it's all going to be that can slim grade quality. I put my own twist on Can Slim. I call it Eagle, but it all derives from there. Looking at extraordinary earnings and extraordinary sales. I like to also look at projections too, because if a stock doesn't have the earnings or sales yet and it's a recent IPO, sometimes the projections are off the charts. That's what happened to Beyond Meat when it first came out. You know what? Let's take a quick look at that one since I mentioned it. All right. So here's Beyond Meat. It was trading this one well back when it had IPO'd. But back here, it didn't have any earnings or sales. It just had projections when they started to come up with deals with McDonald's and Burger King. And then at one point, I think KFC came out with a deal and then it did this. So that's why I like to look at projections in addition to everything else. All right, yeah. So I've got to share this comment from Keep It Simple. Love your book. I am rereading it and absorbing it. I will succeed as a trader and make you proud. So I love hearing that. I'm only here because I have already stood on the shoulders of giants. William O'Neill, Mark Minervini, who I'm extremely blessed to be a friend of his and to be able to call him a friend. Um, by the way, I was having dinner with him when I was in Myrtle Beach. One of the things that Mark told me was that he's only written two forwards. He's been asked to write a lot of forwards. He's only written two. The Trading Mind Wheel is one of them. And so I was extremely touched by that. But yes, standing on his shoulders, standing on O'Neill's shoulders, standing on the shoulders of people like Van Tharp and people like Jesse Livermore, Nicholas Darvis, all these people that have already laid the groundwork. I'm able to go and do this. So I feel as though it's part of my duty to share what I've learned, right? Because I've benefited from it. I've helped evolve a little bit. And yeah, I mean, if it weren't for those people, I wouldn't be here. Um, so thank you. I appreciate your comment, and yeah, go crush it. All right. So I think that's it. So for anybody that would like to hop on the newsletter, we have a free newsletter that goes out a few times a week. There's a lot of education and uh, I'll put in a trade idea at the end of the week. And I shifted from putting out a list of stocks to putting out one idea and going through a full analysis and trying to explain why in basic terms. So if you're interested in any of that, that newsletter is for free. You could go to marrowwealth.com/newsletter. And if you're interested in working with me, you could go over to marrowwealth.com, go to our services tab, and there's a couple of different ways to work with me. So I think that's it for today. I want to say thank you all so much for joining me here. It's been fantastic. And I will see you guys on Friday for the Traders Mind Chat show. Take care, much love, and God bless.